Really appreciate you coming on. You and I have gotten into a couple Twitter debates, and I thought it would just be awesome to have you on the podcast, chat about all your thoughts, what you're building at Scroll, and more broadly, kind of the Ethereum ecosystem. I think you're a very good proponent for ETH and everything that the community is doing, and someone that actually understands the small nuances of the tech, which I think is rare. And so excited to have you here.
Thanks for having me. That's how I typically get on podcasts. I have a few fights with people on Twitter, and then it ends up with somebody saying, "Oh yeah, why can't you just come on our podcast and we'll chat about it there?"
No, it's
yeah. Thanks for having me again. Excited to talk about stuff.
It's a perfect way to kind of spur the conversation, and I think in the past I've been a little bit apprehensive to go back and forth, but I think you do it very eloquently and sometimes with a little ferocity, but it's appreciated. So before we kind of jump into like the nitty gritty of things and talk about like the overview of like ETH and what they want to do, the Ethereum roadmap to scaling, I would love just to learn a little bit about your background and how you got into the blockchain and crypto industry.
Yeah, of course. I got into crypto. I have a computer science background. I was always interested in how hardware works, how you make the code run and the CPU to understand what exactly to run, etc. I remember when I was like 13, 14, I used to take my dad's PC apart and try to overclock it and do like random shit with the hardware that I didn't own, which my parents weren't happy about at the time. But yeah, I was doing a degree in computer science, and my flatmate was into crypto, so it was I think late 2016. Yeah, around late 2016. When tokens just started on Ethereum, and he was trading and like going into the first ICOs and stuff. And I was familiar with Bitcoin at that time, but I didn't really look into it. I just heard, oh yeah, it reached $1,000 in 2014 and then crashed. And I was like, yeah, whatever. People will forget about it at some point. Never looked into it. So yeah, I saw him doing that and I got interested. Like, what's the whole hype about it? And I started looking into ETH and trying to understand how it works, trying to understand what's the fuss about smart contracts, etc. Because I was already familiar from my degree with distributed systems and what they are. And so it was more about understanding the application of that. And once I looked at it, I found the whole idea of programmable, censorship-resistant applications that run on basically magically run without any single party being capable of stopping or interfering with how they're executed. Really exciting and also important, especially considering how the majority of the world doesn't live in a society where you can express your thoughts freely or you can interact with the internet freely, etc. So I thought just from the perspective of censorship resistance, blockchains are very important, and especially smart contracts. And that's how I got into it. And then I worked on a few different projects. I mostly worked on consensus protocols and did a bit of work on privacy preserving stuff. And then I think but I was always following Ethereum and all the progress that was going on in Ethereum. And I think in 2019, I stumbled across Vitalik's post on rollups. And that's how I first heard about rollups. And I just started reading about them from there, and eventually got rollup pilled and became a rollup maxi. No, actually, I'm not a maxi, but yeah, I became sort of addicted with rollups and started writing about them on Twitter. Mm-hmm. And then I got a job at Scroll, and now I'm here.
Amazing. No, it's a very cool journey. I'm always kind of fascinated because I feel like once you start to learn about blockchain and crypto and have like a decent level understanding, you really can't go back. And it's kind of like the only thing that your mind thinks about and it's kind of all consuming. So definitely cool to hear your story. And so you said that like rollups were kind of like and censorship resistance were like the key things that really got you interested on the Ethereum side. Could you talk about maybe how do we start this and framing it on Ethereum? What I mean, you touched upon it briefly, but maybe could you go like slightly deeper into like what specifically made you super excited about the Ethereum and what they were doing? Was it like the smart contracts? Was it just like the general like ethos of decentralization?
I think I don't remember. It was quite a long time ago, but I think originally it was probably the idea of smart contracts. And at the time, the smart contracts were very basic. There was the DAO, which unfortunately panned out the way it did, and tokens and some basic contracts that weren't really anywhere near as complex and as the stuff that we use on the daily basis nowadays. So I think that's what initially got me hooked. And then the whole ethos, the community values, the idea of just the open-mindedness, because at the time, obviously it's not like that anymore because there are a few communities that are open-minded, but at the time it was mainly Bitcoin, Ethereum, and then a few forks of different protocols, mainly Bitcoin. And I never really bought into Bitcoin because in my opinion, if you don't have general purpose execution capabilities, your protocol is basically useless. I don't buy into the whole store of value meme, etc. For me, it's just like useless. Actually, I've never used Bitcoin in my life. I think I got like sent Bitcoin once and that's it. So I'm probably one of the few people in crypto who basically never interacted with Bitcoin. Yeah, and all the other protocols were basically either cheap forks of Ethereum or some forks of Bitcoin, and there was nothing that interesting in the market at that time. So yeah, Ethereum was a natural place to go if you were open-minded, liked smart contracts, and liked the idea of decentralization.
Definitely. I mean, I got into blockchain and crypto in 2017 and trying to figure out like everything that was going on. At that time, it was all ICOs, and definitely fell down the Ethereum rabbit hole and stayed with it. I think in the 2018 and 19 standpoint, it was super hard because there actually wasn't that many actual applications that you could really use. It got really exciting though, starting in 2020 again, once kind of DeFi summer took off with composability. I was really like, it got me really invigorated about Ethereum again. But where I personally kind of started to become less favorable in Ethereum was when we started seeing some of the scalability issues with like gas costs. So could you talk about, I guess like high level, like how has your journey been with Ethereum, kind of been with it early, kind of seeing it get that traction and then going through like the ups and downs and kind of how you think about scalability today. And then we'll go into like some of the more technical details.
Yeah, of course. I think in terms of gas, if we go back to the fees, obviously as everybody else, it went from like, oh yeah, let's just send 100 transactions and it doesn't matter. It costs like 3 cents per transaction to, at some point, I remember I got an airdrop. I don't remember what token exactly was airdropped. And I spent like $400 selling it on Uniswap, something like that, something ridiculous. So yeah, in terms of that, I think at some point, as most of the people, it got to a point where I was like, is it worth it? Or are all the values worth the fees being paid? But then I took a step back and I thought about it, and I was like, it's probably a temporary issue. So at the time, the roadmap wasn't really clear. I think in 2020 was still, roll-up centric roadmap came out and like later in 2020. So we still had the 3-phase sharding model with Beacon Chain phase 0, then phase 1 being data availability and phase 2 being execution sharding. And I'll be honest, I was like, at some point I just because I spent a lot of time studying sharding, and at some point I just came to a realization that sharding isn't really a good option in a sense that if you want to have shared security, sharding and like Cosmos ecosystem works perfectly fine because every single chain is sovereign. So they are essentially independent from one another. But like in the context of Ethereum, I just thought that I was never convinced by it. I just thought that the complexities are not worth it, and the security trade-offs that happen there. And so rollups for me were like an eye-opener that you could essentially have sharding, but without all the complexities that come with sharding to the base layer, because you essentially outsource all the complexity to rollups, and then the only complexity that is added to the base layer is the more complex smart contracts that are verifying those batches from the rollups. Or just one thing to add, when I'm talking about sharding, I'm talking about execution sharding. That data sharding is less complex and also leads to less problems as a result. So yeah.
Perfect. Appreciate the background context, and definitely want to get into kind of all the nitty gritty on layer 2s and the different rollup solutions. But before that, I think like when you and I, or when I follow along with your Twitter threads, the biggest thing that I kind of see as like a recurring thing that ultimately ends up kind of being like the crux of debates is kind of nodes and how big either full nodes should be or light clients, all that like physical hardware, and how that kind of ultimately manifests itself into the network. So I'd love to start the conversation there. What are your thoughts around like full nodes, thoughts on like hardware specifications, and then we'll jump into light clients.
Yeah, of course. Let's go there. It's the most fun subject to debate about, because essentially most of the other things, I have a feeling that a lot of other things Solana and Ethereum communities are in agreement with. It's mostly the full nodes and nodes where our visions a bit diverge. Yeah. So from my perspective, I think that we discussed it with Anatoly last week. I think the goal of the protocol should be to maximize the number of full nodes, because the more full nodes you have, the bigger the probability that at least one of them is honest and is going to catch some invalid state transition or something invalid that the majority is doing. It doesn't have to be like millions. I don't think it's realistic. I think once you get to like hundreds of thousands of full nodes, you get into problems with like data propagation, all the hops, the cost of propagating data is just not worth it anymore. But yeah, but assuming that we're within a certain like acceptable range, I think you should maximize that. Within that range, you should maximize the number of full nodes. And in terms of the hardware requirements, again, my opinion is that the lower the hardware requirements, the better. Obviously, Solana also has that ethos where within a certain limit, you would like to minimize the hardware requirements. But for Solana, the user demand is more important. So the throughput demand is more important than the hardware requirements. So if, let's say, the demand all of a sudden spikes, instead of limiting the supply, Solana would just increase the hardware requirements to cope with that demand. Whereas with Ethereum, the ethos is a bit different. So regardless of how high the demand is, the supply will always be relatively limited. It can obviously change. It's changed a few times throughout the years, but it's still quite limited relative to the demand. And that allows Ethereum to be quite accessible in terms of running full node. So essentially, I used to run a full node on a Raspberry Pi 4, which is what with the SSD, it's like $150. So the cost of running that is relatively negligible, and I think that an average household would be able to do that on their PC or Raspberry Pi. They don't have to, but the point is that you should always have an option if you want to.
That makes sense. In terms, I guess, one of the big things that I think is a little misconstrued on the Ethereum side is the number of full nodes. I think a lot. I don't know why it ultimately got to be this way, but essentially the number of staking nodes was kind of determined or used as like the full validator count, but those aren't actually representative of the full nodes. Do you know how many full nodes there are on the Ethereum side today? Because I look at different websites and I see conflicting numbers. I find anywhere between like 6,000 and 10,000.
Yeah, I would say. I mean, if you look at as you said, if you look at different websites, the numbers will be different. Mm-hmm. But my rough guesstimate would be between 8 and 12,000, I would say, because not all nodes are reachable at all time, and also I find with a lot of websites there are some weird bugs. For example, I think RPC nodes constantly shows that like 33% of the nodes are behind and sinking, which is unrealistic. And yeah, so I would say my guesstimate would be between 8,000 and 12,000 nodes.
That makes sense. And then on the second point, definitely an agreement on like the hardware standpoint. Ultimately, you do want to keep it as low as possible. I think one of the hard things that I now see in the industry today is like what is acceptable and like where do we kind of like draw the line. So I'm curious, like in your point of view, I mean, obviously, everybody wants the hardware to be cheap as possible and it kind of have the network be as inclusive as possible. But I think what's been interesting to me is like, as Ethereum has grown, they have upgraded some of the properties or increased gas limits, ultimately like increasing the amount of compute needed to run a node. So like in your mind, I'm curious like how you think about like where the line should be drawn in terms of how much a hardware cost should be. And then at what point in time is it acceptable to upgrade hardware?
It's difficult to quantify, but I would say a good benchmark for me with the way IoT hardware and stuff, the efficiency of the hardware increased in the last decade. I would say a good benchmark for me would be a Raspberry Pi 4. I wouldn't go any lower than that because it's unviable. Like if Raspberry Pi 4 can run it, any PC or laptop, any relatively modernish PC can run it. And I wouldn't really downgrade to like mobile phone level of hardware because at that point, I can't see any single user running a full node and spending like data on propagating and repropagating data, and that wouldn't be viable. I think a good minimum bound is like the minimum stationary hardware that you can run on. So with laptops, it's unrealistic that you would go on a plane, connect to the Wi-Fi on a plane and like sync your node while being on a plane. It's more like, you have a PC at home or you have a Raspberry Pi at home, you install the client there and just run it there. So that would be my rough benchmark for how low the hardware should be.
From a community aspect, the lower bound. From a community aspect, I guess like how do we kind of find common ground, I would say like across ecosystems to, I would say, define like what is acceptable? Because this is like, what I would love to do for the industry is really try to find like common grounds on like objective ways that we can measure these. And so I'm curious, like as an industry and like more, like can we find like a measurement or an objective? And I think full nodes is a great kind of proxy to that, but the cost difference can be different. But I'm curious if you have any thoughts.
I think it would be difficult to come to like an objective measurement. Firstly, there are just too many variables, and different protocols have different philosophies and different ethoses, so different communities, and so you would have let's say, Solana community saying, oh yeah, the most important is to be capable of handling user demand, and say that, oh yeah, Ethereum fails because the fees are too high. And the Ethereum community would be like, oh yeah, if I can't run a full node at home, then there's no point in using that protocol. So I don't think some tried. So I've seen there was a paper published by Cardano IOHK researchers a few months ago about like trying to define what decentralization is in a more formal way. But it's always like it doesn't matter whom you read and what like whom you talk to. It's always going to be, even within Ethereum, I think if you put like 20 people in a room from like major people, major influencers, or major researchers from the Ethereum community, none of them will agree on what the definition of decentralization is.
Yeah, it is a hard topic. I mean, maybe let's jump on to the kind of decentralization topic and then jump back, and then we can talk with light client. So this is another thing that I would love to get your take on it. My kind of point of view on decentralization is similar to yours in the fact that we should really try to get a large number of full nodes, because that actually does have like a physical representation of like recoverability of the network. And then the second thing being is, what is the Nakamoto coefficient? Because in proof of stake networks, it also can have a effect on the network in terms of like stake distribution or censoring transactions. So the number of independent parties that would need to collude to kind of obtain majority of stake weight to either censor transactions or like halt the network. But I'm curious your thoughts and like how you kind of view it as well.
I think Nakamoto coefficient is one of the proxies of how you can measure decentralization, but I don't think it's like because sometimes people present it as like the most important one. And taking a step back, even if we assume that like it's the most important metric of how you would measure decentralization, how do we define Nakamoto coefficient? Does it measure liveliness failures or correctness failures, or because let's say for Ethereum, do you classify liveness failure as a protocol failure? Because finalization. So essentially in Gasper, you can have more than 33% of the nodes that are dishonest, but the protocol will continue to produce blocks, so the liveness will be preserved, but the blocks won't be finalized. So there's a probability that like a certain chain will be reorged at some point. So do we consider that to be the correct way of the so does Ethereum is Ethereum still functioning when that happened, or has it failed when that happens? So it's a bit of there's no concrete definition of what Nakamoto coefficient is, and therefore it's difficult to put a number on it. And on top of that, there's also questions. So for example, with Lido, do you count Lido as one entity, or do you count Lido as multiple entities?
This is a good question.
They don't control them.
What do you think?
Yeah. I personally wouldn't count it as one entity. So, for example, the same with, I'm not sure if that's still the case, but I remember some time before Solana Foundation delegated quite a bit of Solana tokens to users for users to run validated nodes, right? So do you count those as being Solana Foundation, or do you count those as being the users? I think it's just the same argument.
Because it's the Solana Foundation stake.
Yeah, so you're essentially relying on their promise to actually delegate that stake, because it's difficult to verify unless you speak to every single validator that actually got the delegated tokens. And I think it's the same with Lido. It's just that you have to a certain degree, trust that they're actually doing it. But I think it would be fair to assume that it's actually distributed.
Yeah, I mean, I've seen a couple metrics of like trying to break out, like, even if you didn't count Lido as like a single entity, what that would look like. And I think I saw, and I could be totally wrong on this, it was something around like 10 or 12 like independent parties that make up like a majority of like the Lido pools. So when you did that and then also added Coinbase, which was like the other entity to like the majority or to 33% stake weight, um, it is definitely trending in the right direction, but it isn't as high as like other Nakamoto kind of coefficients in the industry. And so I do think the reason why I like the Nakamoto coefficient, just because it is like something that is objectable, that you can kind of do like a unbiased comparison across blockchains. But I definitely agree on the edges, there's things that you mentioned that could definitely affect and ultimately are a little bit more nuanced.
Just one thing to add. I think it's fine to use Nakamoto coefficient as a proxy, but we should agree on what Nakamoto coefficient is, because again, so for Ethereum, I would say 51% is the Nakamoto coefficient, whereas for something like Solana, it will be 67%. So how do we compare the two?
And is that still true in the proof of stake transition?
Yeah, because if the colluding parties control, let's say, 40% of the stake on Ethereum, the only thing that will happen is the blocks will take time to finalize. So they won't be finalized after 12 minutes. They'll be finalized after the stake of those colluding nodes decays slightly through leakage to go back to below 33%. And therefore, the protocol still continues to produce blocks. So whether we consider that to be a fully functioning network or whether we consider that to be some sort of a failure.
Makes sense. Interesting. Yeah, definitely lots of small nuances. And I think those small nuances are actually a lot of like the crux of debates that kind of end up happening on Twitter. But in terms of maybe staying on the decentralization a little bit front, kind of wrapping that up and then going back to light clients, and then I do want to get into like the Ethereum scaling roadmap. On economic security, how do you view that in terms of like security for the network as well?
I think people present it as a bigger thing that it actually is. So let's put it this way. If the majority of the network is corrupt and let's say their portion of the network that they control, let's say the stake or the hash rate is valued, I don't know, for example, at like 10 billion, they still won't be able to produce an invalid block because any honest full node will reject it. So the economic security is only helpful to protect against censorship attacks and also to protect against, for example, so light clients rely on economic security to function. So the higher the economic security, the better, but they don't protect against correctness failures because if that happens, any honest node will just reject the block.
Makes sense. I think I agree with that as well. So let's jump to light clients because you mentioned them. What is your point of view on light clients compared to full nodes? And say that you had, I'm curious, if you had larger full nodes, would it be acceptable in your point of view to just run like a large majority of light clients that are able to kind of double check full nodes?
I think light clients are fantastic, and they're the most viable solution for the vast majority of the users. Going forward, I think in a few years, hopefully we'll have the wallets on your mobile phone, etc., running some form of light client that can do at least some verification versus just trusting some centralized RPC. And yeah, so they drive a lot of innovation in terms of being able to interact with blockchains without trusting some centralized entities or some middleman that basically acts as a layer connecting you to the chain. But at the same time, they are not a substitute of full nodes, because light clients rely on full nodes for their security. So essentially, you can only maximize the network resilience by having as many full nodes as possible. Obviously, I'm not talking about stuff like Celestia, because for DA it's a bit different. But for execution chains, they still depend on the resilience of the network, and so the number of full nodes.
Yeah, I'm definitely excited to watch like the continued light client revolution and how they'll continue to be utilized in the future. I'm definitely in agreement. I think they're super helpful. So maybe kind of getting into the meat and bones of Ethereum now and learning a little bit more about the roadmap. I'd love to start maybe with like some of the recent or upcoming upgrades, maybe starting with 4844 proto-dank sharding, and then kind of get into some of the roadmap with dank sharding and your thoughts around each.
The whole idea of data availability sharding is important for Ethereum because of rollups. So the core notion of rollups and how they differentiate from, let's say, Plasma or Validiums is that they post enough data on chain to allow the user, in case of some failure, to be able to recover the state and be able to transact or interact with the rollup without trusting anybody. And that's the main crux of why rollups are secure the way they are. And cold data in Ethereum, so by cold data, I mean publishing data inside a transaction, is quite expensive at the moment, because all the cold data can be interpreted by the EVM, so it has to be inputted into the EVM, and it's quite expensive. And also the other reason why is because Ethereum tries to limit the block sizes, because in the worst case scenario, the blocks, if let's say the entire block is just filled with bytes, the block sizes can balloon and therefore can have a negative impact on the performance of the network. And that's how dank sharding was born. Dank sharding is a solution created. It's a sharding model created by a researcher at Ethereum Foundation called Dankrad Feist. That's how he got the name. Actually, a lot of people think that he named it after himself. It wasn't. It was Vitalik who named it after him. So Dankrad didn't actually do that.
It's funny.
So the core idea of dank sharding is that there's a tight coupling between blob transactions or data blocks, whatever you want to call it, and the execution blocks. So the way the current blocks are. In a sense that because we already in Ethereum accept that there's some level of centralization going on because of MEV. So even right now, Ethereum has an informal proposal builder separation when there are a few large entities that are building the blocks, and then the validators and the network just accept the highest bidding block and then propagate it as their own. And because it's already like quite expensive to run a builder node, the whole premise of dank sharding is that it exploits the fact that those nodes are quite beefy, because dank sharding is based on a polynomial commitment scheme called KZG, which is quite expensive to compute, and therefore it would be unviable to run on, let's say, your Raspberry Pis. Like, technically, I could run a validator node on a Raspberry Pi, and there's no way a Raspberry Pi could compute. Then I don't remember the exact number of KZG commitments per block, but like quite a significant number of commitments per block in like acceptable time. And therefore, essentially, the computation of KZG commitments is outsourced to the builder nodes. They do all the work, and then they separate the block into like slices called block transactions. Or if you want to think about it in classic sharding, every block transaction is essentially a separate data block, and then propagate them to different nodes. I think I probably need to return and explain why KZG commitments are important, because people are going to think like, what the hell is a KZG commitment?
Go for it.
So essentially, the data inside the block transaction, or the data availability block, whatever you want to call it, is inaccessible to the... Oh, just a second. I actually forgot to plug the laptop, and sorry about that.
No worries.
Sorry that you'll have to do a few edits here.
All good.
Yeah, I think it's charging now. Oh, luckily it was at 1%. Shit. Glad I saw it in time. Let me remember what
Commitments?
I was talking about. KZG commit.
Yep.
Oh, yeah. So the data inside the block transactions is not directly accessible to the EVM environment, so the execution environment, because that would require for every node to have that data, which defeats the point of sharding. So the data is disseminated and split between different nodes in the network. And what KZG commitment allows you to do is that data in a block transaction to be committed to this one small commitment, which is a few hundred bytes in size. And then anybody who's trying to, like, let's say it's a rollup that published that data via block transaction, any interaction within the execution environment, so within EVM, can prove the opening of that KZG commitment. So let's say I need certain part of the commitment, not the entire thing, but like a few hundred bytes within that commitment. I can prove that I know what the original data was that was put in that commitment for that 100 bytes, without revealing all the data that was in that commitment. And that allows you to basically support that data within the execution environment without having every node store all the data corresponding to the stuff being executed inside the EVM. And have I explained it in a relatively accessible
I believe so.
way, or is it?
So, I mean,
okay,
just each node is doing a fraction of the work.
A fraction of the storage. So the work is essentially the same for every validator node. The only thing is they only store a portion of the data per block rather than the entire block.
Gotcha.
And proto-dank sharding came about because dank sharding is probably the most complex change to Ethereum that ever happened after proof of stake transition. Mm-hmm. And so it was obvious that it'll take quite a bit of time to materialize. And proto-dank sharding is essentially the same thing as dank sharding, but without the sharding part. So the commitments are, paradoxically, I know. So the commitments are computed still. So everything is done in the same way. But the only thing is the data is not split between nodes. All the nodes receive all the data. But the downside of that is that you can only propagate so much data. So per block, you're limited to 2 megabytes versus dank sharding, which I think is limited to 32 megabytes of data.
Yeah. So I think that's like my big takeaway here. And I'm curious on your opinion. Like, by increasing the amount of data that Ethereum can ultimately propagate and that can run on kind of generalized hardware, as we talked about earlier, that is relatively low in hardware specs. the end goal is really increasing how much data you can propagate at the base layer while keeping the hardware specs relatively low and kind of the Ethereum ethos standpoint. And with sharding or proto-dank sharding with 4844, you're doing, I think it was on average the target was 1 megabyte in each block, with the upper bound being 2. Or maybe it's 2 on average.
Yeah, so each blob is 128 kilobytes, and the target is 8 blobs per block, and then the maximum allowed is 16. So yeah, 1 megabyte, and the maximum allowed is 2 megabytes in proto-dank sharding. In DAG sharding, it's 128 and 256 respectively.
Gotcha. So a little over 1 megabyte on average for proto-dank sharding, and then dank sharding will be 32 megabytes for each block, and those block times are every 12 seconds, which averages out, I think, to like 1.3 megabytes per second with dank sharding. So I guess like
I think the target is 1.3. The maximum is like 2.6, something like that.
Okay. I know Ethereum gives a little bit of buffer room in the blocks.
Yeah.
So my question being, like, I'm always interested in trying to figure out like how much data we'll actually need. Do you think at the end of the day, and today, like, maybe we should go back a little bit and like preface this with like how much data is being propagated today. I think I was looking prior, Ethereum's like average blocks are like 100 kilobytes today.
Yeah, should be roughly like that.
And so
100 maximum, 200.
Yeah, so this, 4844 is doing at least 10x more data throughput, and then the full dank sharding is much, much more. So do you think, though, like this data increase in capacity, even with like full dank sharding, like 1.3 megabytes per second, will be enough with even like the layer 2s and the kind of data and compute compression? Because this is like my like end question that I always come back to, like, and if it's not enough, like does Ethereum either increase like the hardware requirements that we talked about earlier, or do you like continue to add like shards?
Let me go step by step here. Sure. So I think if you apply compression and with zk rollups, if you post the state devs, it's likely that you would probably be able to fit maybe like 50,000 transactions per second.
I think in the Talix post, he did the math, and it averaged with full sharding and full zk rollups, it was around like 80 or 100,000 TPS.
Yeah, that's. I think that's a very optimistic number. Realistically, it's going to be a bit less because not every transaction is identical, and also it's hard to predict. That's one of the problems that we're facing when like trying to model how much data is going to be consumed, is that the user behavior is likely going to change once people transition to rollups, because it's cheaper to transact with rollups, and therefore you don't need to think about what you do that much, because the difference between paying, I don't know, $5-10 per transaction and a few cents per transaction is drastic. And like for the majority of the current users, paying a few cents per transaction is negligible. It doesn't matter. Obviously, ideally, once everything matures, it's likely going to drop below like 1 cent, drastically below 1 cent. But like I think in the beginning, the current pricing I think is around like 3, 4, 5 cents per transaction, and therefore the behavior is going to drastically change. So it's hard to predict how much data is going to be consumed per transaction. But based on the current estimates, on the current usage, let's say if we just replicate the current network usage to rollups, I would say 50,000 would be a good approximation. Upper bound, I think Vitalik is probably right. It's around 100K, but I think realistically the upper bound will be in and around 50K.
That makes sense. When do you think, I think you're following kind of the Ethereum roadmap much closer than I. I know that they plan on getting out 4844 sometime this year, but I'm curious if you have any understanding of when the Ethereum community plans to ship like full sharding.
Yeah, for it for or protodang sharding, depends on how you prefer calling it. Should be shipped sometime this year. I think it's going to be withdrawals are probably going to ship in March, April, and so Ethereum typically has 2 hard forks per year. So I would say Q3, Q4 this year would be a good approximation, unless something goes horribly wrong. That would probably be the time where proto-dang sharding is shipped, and full-dang sharding, I would say, at least, in the most optimistic case, a year from that.
Gotcha.
So I would say late 2024.
That makes sense. Interesting. So, I mean, in some of our Twitter debates, I always come back to just saying like increase the base layer throughput, and you're like, no, it's not that simple. So I'd love to like learn some of your thoughts around. I mean, if say that 500,000 is not sufficient, what are like the better routes to actually increasing data throughput, or like more transactions per second to meet user demand?
So I think by the time the demand is enough for us to think about whether 50,000 TPS is enough or not, I think we're a few years away from that being like even plausible. I would say that just one thing to preface before I go on to say what I was about to say is that while I think that hardware should be limited, I don't think it should be fixed. So I think we should update the hardware as the availability of hardware and efficiency of the hardware available on the market improves. So let's say once every 2 years, it's fine to maybe increase the hardware requirements by 20-30%, because overall the accessibility of the hardware it scales, and therefore of more efficient hardware, and therefore I don't think it's an issue. So from time to time, I don't think it would be a problem to increase the throughput capacity of Ethereum, or let's say increase the gas throughput of Ethereum as the hardware increases. But also in terms of state growth, which is the main bottleneck of Ethereum at the moment, there are a few things that can be done in order to combat that problem. So I think there is still quite a bit of headroom where you can optimize. So I think you can probably squeeze out quite a bit more performance that is currently available. It's just that because performance wasn't really a priority until now, or until rollups proliferate, there was no real effort to optimize things. It was more about, let's get everything secure, let's get everything correct, and then once everything is running correctly and we're sure that everything is correct, we can optimize from there.
That makes sense. So as hardware becomes increasingly better, or becomes more efficient over time, just kind of swap out the whole hardware for new hardware to take advantage of those same efficiencies while price stays relatively stagnant.
Yeah, I would say so. So let's say in a few years, the hardware that is currently considered high end is probably going to be considered low end, and so more people are going to be running that hardware versus the same hardware being run now, and therefore it makes sense for you to increase the hardware requirements, because the majority of people have access to what was considered to be high-end hardware just a few years ago.
That makes sense. And I guess maybe this may lead us to our next topics with layer twos, but is there, outside of, say, just increasing like the hardware requirements, are there any other kind of point of views that you think are acceptable to increasing the base layer throughput so that you can do more transactions?
You mean by doing something on the L2s, or
Well,
by optimizing?
by like I mean like overall, like outside of like hardware or just increasing like the raw hardware, in your mind, is there any other ways to increase like base layer throughput that would allow the network to kind of still function?
Yeah, I think you could apply some form of compression on data, and then once data availability sampling comes around, you can probably shard the data to even more. So let's say instead of splitting the block between like having each node custody like 1/10 of the block, you can have each node custody 1/20th of the block. And that's why also that's another reason why for Ethereum especially the number of full nodes matter, because the more nodes you have in the network, the more you can essentially split the custody of the data. Obviously to a certain degree, because the more you split it, the lower the number of the nodes that have a certain part of the block, and therefore the probability of retrieving it decreases. But yeah, those I think are the two main approaches. There are probably a few more than I haven't thought of at the moment, but yeah.
Okay, interesting. Well, let's transition to layer twos. I think this is a topic that you're have spent a lot of time thinking about, and so would love to learn your thoughts and how you're thinking about the market. So maybe talk about like optimistic rollups, your thoughts there, and then kind of compare and contrast those to what's going on even at Scroll and the zero knowledge space.
I think I'm a bit biased here towards the zk part, but I'll happily talk about both. So just a short explanation of what an optimistic rollup is. So an optimistic rollup does the execution off chain, commits the data to on chain and some state, and optimistically assumes that it's correct unless a certain node challenges that state commitment within a certain period of time, let's say a few days. And in terms of challenging, anybody who's running an L2 full node is capable of challenging as long as they submit a bond, because otherwise, if you don't submit a bond, there's a problem of DDoSing, because essentially I can grief the challenge, the person who submitted the original commitment by saying, oh yeah, he's actually wrong, but in reality, the person who submitted the commitment is right. So you need some form of bond or a security deposit to protect against those kinds of attacks. And yeah, and essentially what it boils down to, the security of an optimistic rollup, is that you need at least one full node capable of detecting an invalid commitment and challenging it.
Comparison to zero knowledge and from optimistic rollups and kind of like the general trade-offs there.
Yeah, so the main assumption, the only assumption that an optimistic rollup makes is that there's an honest full node, a rollup full node that can detect an invalid state commitment and challenge it in time. But the benefit of optimistic rollups at the moment, obviously, once the zk stuff becomes more optimized and more mature, it's not going to be a benefit anymore, is that an optimistic rollup can essentially run anything at the moment. So in an efficient manner. So for example, optimism, the basis of optimism, the challenge mechanism, the execution environment that it uses is MIPS. And it can you can compile any execution environment into MIPS and just have a valid fraud proof. So currently they compile Geth, which is one of the Ethereum clients, but you can essentially compile anything, Solana, Cosm, Wasm, whatever you feel like you want to compile, you can compile into it. And the same is true with Arbitrum. Arbitrum doesn't use MIPS; they use Wasm instead. but the concept is the same. You can compile anything into WASM, any execution environment, and have essentially a fully functional rollup. You still need to add a few things, but the core will be functional. Whereas with a lot of zk rollups, including Scroll at the moment, you have to custom build the circuits for every single execution environment, because it's theoretically possible to do the same thing, just create a circuit for MIPS and then compile anything into MIPS, but the overhead will be so massive that it wouldn't be viable to compute proofs. It'll take like probably hours or even days to compute a proof for such a setup. So instead, what all of us do are essentially custom build a circuit targeting a specific execution environment. So in case of Scroll, it's EVM. So every single opcode is represented by a custom opcode, by a custom circuit, subcircuit. Every single, let's say, read, write, it has its own circuit or a subcircuit, etc., etc. Whereas if we were to take an optimistic approach, you would just compile geth into a circuit, MIPS, and then just prove it and prove the execution of MIPS in the circuit. So yeah, that's the downside. Let me explain the zk part, because I went on to the downside without actually explaining what zk rollups are. zk rollups, instead of using the optimistic, it's called, I don't think I mentioned, it's called fraud proofs, or there's another term that people like to use nowadays, because so Optimism uses a different term. They don't use fraud proofs anymore because they think it has like bad connotation. Yeah, but I forgot the term. Anyways, yeah. So zk rollups use zero knowledge proofs in order to prove the correctness instead of using fraud proofs, and zero knowledge proofs are a family of cryptographic protocols that were originally constructed as systems, as a privacy preserving cryptographic systems, but modern zero knowledge proofs have this nice property which is called succinctness, which means that you can prove verify the correctness of execution in sublinear time, meaning that, I don't know, if let's say it takes you 5 minutes to execute it, the cost of the time to verify that execution versus doing execution is like much smaller. Let's say for modern zero knowledge proofs, it's like a few milliseconds at most. And this allows you to aggregate a lot of transactions off chain, prove them off chain, and then put them on chain and cheaply verify them on chain. And we refer to those proofs as validity proofs instead of zero knowledge proofs, because they prove the correctness or validity of the execution instead of actually being zero knowledge or privacy preserving. That's one of the things that confuses people. A lot of people whom I talk to actually think that zero knowledge rollups are privacy preserving. They're not. They just use zero knowledge proofs because of that nice property of succinctness. So essentially, the security of a zero knowledge rollup boils down to the correctness of the proof system that is being used. So let's say you use Graph 16, which is one of the relatively modern proof systems. Assuming that it's correct and it's not broken, every time the proof is submitted on chain, you're guaranteed that it's going to be correct. And so as long as you trust the maths and you trust that the proof system used is correct, you are fine. Your funds will always be secure.
I guess, I mean, the big thing that you mentioned there is the hardware aspect needing to kind of be tailored to a single execution environment. What will it take to kind of get that proof time down to generate the proof, like to say, much smaller time, and then make it a little bit more general purpose for multiple different virtual machines?
Hardware acceleration, so either proving inside GPUs or ASICs.
I
That's
guess,
probably the main approach, aside from optimizing the proof systems themselves, which
yeah.
bear in mind that these whole things that are being built right now, so Scroll, zkEVM, Starkware, Scar, were considered to be impossible like 4 years ago.
Yeah.
So the fact that we currently have those systems live on mainnet in some cases is a miracle to some degree, because I remember looking at even basic execution like 2017, 2018 and thinking, no, man, it's going to take like another 10 years for this to be viable.
No, I mean, it's amazing what the blockchain space has ultimately pushed to get some of these technologies to become, as you said, much more mainstream in a relatively short amount of time, where people ultimately didn't know how long it would take or even if it was possible. So it's been amazing to watch. On one thing, though, that you mentioned, I mean, just kind of having ASICs for the hardware standpoint, or even on the optimistic side, one of the big kind of criticisms of L2s as they stand today has been kind of around sequencers and sequencer decentralization. Can you talk about, on maybe on both fronts, on the optimistic side and the zero knowledge side, your point of view on decentralization around the sequencers and kind of creating these proofs?
Yeah. Just one thing to preface before I go into it. So I stick to quite a strict definition of L2, and according to my definition, there are no live L2s at the moment. The only L2 is Fuel Labs, which has like $8 in TVL and is barely used. So yeah, I would say, while, let's say, Optimism, Arbitrum, Starknet, etc., strive to be L2s and rollups, in their current form, they're not, because a rollup has to only rely on the state correctness enforcement mechanism, which is either the fraud proof or the validity proof. Mm-hmm. And if you add any other assumptions on top of it, it's no longer a rollup. And so they're kind of, I call them, a lot of people find it a bit insulting, but I call them glorified sidechains with a promise of being rollups.
Okay. I like it.
So yeah, in terms of sequencer decentralization, another thing to add. So most of the zero knowledge rollups are going to split the roles of sequencers and the nodes that compute the proofs. So you have sequencers that compute the blocks and submit the batches, and then the provers who compute the zero knowledge proofs for those batches and then submit the batches, the validity proofs on chain. And so those are two different problems. But sticking to sequencers, I think I said in one of the panels like a few months ago that paradoxically it's more difficult to decentralize an L2 rather than an L1, because with an L1 you just plop a consensus on top of it, have a bunch of nodes participate in it, and call it quits. Whereas with optimistic rollups, with any rollup, you need to optimize and minimize the overhead that you introduce, because if you just add another consensus on top of it, it adds unnecessary overhead, and basically just you're already paying Ethereum for the consensus. So essentially you're spending money on another consensus on top of that consensus. And because rollup security doesn't rely on sequencer decentralization, even with a centralized sequencer, the worst that it can do is temporarily censor a transaction. So it's a UX issue rather than a security issue. But ideally, of course, you would want to have decentralized sequencers, decentralized provers, decentralize everything. And I'm of an opinion that if you don't have that, then the UX is going to suffer and you're going to have problems at some point. And so, yeah, so essentially it's this cat and mouse game where you want to have the best UX, but at the same time, you want to have the least overhead possible. And I think for a lot of us, we're going to accept a bigger overhead, but improve the UX, because I spoke about it with Anatoly. So in a hypothetical example where Solana becomes an Ethereum zk rollup, let's say this, in an alternative reality, that is the case. Solana, you can, if you're a user interacting with it, you can use Solana's security properties for, let's say, some economic guarantees until the state and the validity proof are committed to Ethereum. Then you can use Ethereum security. So essentially, the model can be described as sidechain security until it's secured by the underlying base layer. In that case, it's the security of the base layer.
That'd be interesting.
You can wait for a bit, and as proof systems improve, as everything improves, the wait time is going to be shorter. I think in a few years, you're going to have wait times of a few seconds. Hopefully, I'm not going to commit to that or promise anything, but yeah, hopefully that's going to be a case. But if you don't want to, you can essentially use the security, the economic security of the roll-up to promise you some temporary finality guarantees. I wouldn't call it finality, but economic guarantees that your transaction is going to be included.
That makes sense. Yeah, I definitely understand that. I think I've always been fascinated with layer 2s, because once you start trying to decentralize the sequencers and start adding consensus, you get that overhead, which is unfortunate. But at that point, it starts to look, like you said, kind of a separate blockchain or a sidechain, if you will. So I'm curious, like, how these, do you think it will ultimately, be kind of sidechains that are kind of their own consensus, have their own kind of full node ecosystem, and then ultimately occasionally settle back down to an Ethereum or to another layer 1? Just to get those decentralization properties?
So in my vision, you would have rollups that would have really fast off-chain confirmations. So let's say a few seconds. And then assuming that proof systems are optimized enough, once every, let's say, a minute or 30 seconds, they would secure it with the base layer. So it's not going to be like once every hour or once every 2 hours, but it's going to be like once every block or once every 2 blocks. Technically, you don't even need. So that's one of the interesting things about, if you commit transaction data rather. I keep going on these tangents, but it's important to add that there are 2 data availability modes for rollups. One is you commit transaction data, compressed transaction data, and another mode is you commit state differences instead of transaction data. So state diffs are essentially, let's say you have a Merkle tree which stores all the state, and you say instead of committing the transaction and having the nodes executed and then updating that state, you say, oh, by the way, this transaction resulted in this slot in the tree being changed from this value to this value, which for the vast majority of transactions is smaller. But the downside is that you need to trust some external party that they store the transaction history, because it's not on chain. So it's a trade-off. But the advantage of posting the transaction data instead of state diffs for zk rollups, also note that state diffs are only possible with zk rollups, not with optimistic rollups, because with optimistic rollups, you need a way to reconstruct the state tree in order to trust that it was correctly committed, whereas with via execution, whereas with zk rollups, you can just do it by trusting the validity proof. But yes, the advantage of having transaction data is that you don't need to wait for the finalization of the challenge mechanism, or let's say the validity proof being submitted in order to finalize your transaction off chain. Because as long as you run an L2 full node, you can, and the data is finalized on chain, you can verify that the data leads to correct state commitment. So you don't have to wait for the bridge or the L1 to be convinced that that state commitment is actually correct. And therefore, you can have finality that spans Ethereum block time. So essentially, if, let's say, at some point Ethereum has single slot finality where every 12 seconds the block is finalized, you can have the same for L2s settling on L1.
I see. So that layer 2 kind of with its distributed kind of node set and consensus would ultimately have its own finalization. And because in the layer 2, it has finalized in that ecosystem, you'll count that as final, even though it's going to ultimately settle on to a layer 1.
It's technically already settled on an L1. It's just that L1 doesn't know that it's settled on an L1 because the L1 doesn't run an L2 node. So as long as the data is committed and you can verify that the state commitment, so you can compute the state commitment from that data, you don't need to wait for the L1 to be convinced that the data commitment and the resultant state is correct. You just know that, at some point somebody will commit the validity proof or the challenge window will expire and this will be finalized by the L1. So it's a bit confusing because and we've been having this debate amongst those different projects how to define finality for rollups, because once the data is committed, it's essentially finalized, but the L1 doesn't know that it's finalized. So do you view the finality from the perspective of an L2 node, or do you view the finality from the perspective of the bridge on the L1 that is verifying the commitments?
I guess in my point of view, if going back to like our earlier comments on like full nodes and kind of economic security in some sense, or like high Nakamoto coefficient, if the main purpose of the layer 2 is to inherit those features, to me it makes sense to kind of have finalization once it's truly using the properties of the layer 1. But
it's still using. The only difference is that you as an L2 node are assured that it's finalized. It's just that the L1 doesn't know until the validity proof comes in or the challenge window for the
And that's my, I guess, like my point of view is that once it's actually, I mean, yes, it will up in there eventually, but because it does not know or that transition has existed as of yet, then it would only be kind of final once it's actually like hit the layer 1.
So I agree with you. So I have those two visions. So I use two definitions. So one, which is a bit confusing to any outsider, I use off-chain finality to define once the data is finalized, and then roll-up finality once the L1 is convinced that the data is finalized. Because for you as an L2 user, if you run an L2 node, you don't have to wait. The only people who have to wait are the people who either run light clients or the people who and don't want to have some economic guarantees, or the people who are withdrawing from the L2 to an L1. Because the withdrawals can only be processed after the L1 is convinced.
Yeah, it is interesting. I'm curious, like what the industry is going to kind of think about this, and as kind of L2s become more prolific, more dominant in like the Ethereum ecosystem. But I guess going back to like the consensus and the consensus overhead, and just like general decentralization on the layer 2s and running layer 2 full nodes. What is your point of view for like a sufficient or fully decentralized layer 2?
From the perspective of security, you can minimize the number of full nodes and it's going to be as secure. From the perspective of censorship resistance and economic guarantees, you should try to maximize it, but within reason. You don't have to have the same number as L1 nodes. You can have like let's say, an order of magnitude less, as long as there's enough to plausibly guarantee that your transaction is not going to be temporarily censored, or like it's easy for an attacker to take over and, let's say, take a controlling stake and temporarily basically mislead you by promising that they're included your transaction into an L1 batch, but not actually include.
So if Ethereum in that example had like 100,000 full nodes, like 1,000 kind of full nodes on the layer 2 would be sufficient?
Yeah, I think so. Yeah.
Makes sense. Cool. Well, I feel like I've almost been going an hour and a half, or a little bit shy of that. I typically, maybe we can touch upon MEV super quick, and then I feel like you and I could talk about this forever, but I want to try to keep it hard cap it a little bit on the time stuff. So let's go to MEV, talk about that briefly, and then
of course,
maybe do an episode 2, because I've been having a lot of fun and love hearing kind of your point of view on the ETH roadmap and how things are going to play out. So on MEV, you said earlier in the podcast that it was a little bit of a kind of naturally centralizing force. What is your point of view on like cross-chain MEV and just intra-chain MEV, and kind of some of the differences between those?
For Ethereum, I think going forward, that the more we move towards the L2s being the main focal point from the perspective of the users, because my vision is that in a few years, most of the users are rarely, if ever, going to touch Ethereum itself. Most of the transactions are going to happen on the layers above, so L2s, L3s, and then Ethereum is mainly going to be used for security as well as composability between rollups. So let's say I want to move from Scroll to Optimism, I'll bridge through Ethereum. But then it's also, I think for the vast majority of users, you wouldn't even need to do that. As long as you're not moving like, I don't know, $100 million, you could bridge through, let's say, Connext or some other bridges that connect rollups directly instead of going through the L1. And there's also like a lot of research being done on how you can bridge faster without adding additional trust assumptions through like using third-party bridges. And there are some interesting results there. In that scenario, MEV becomes a bit of a different beast to what it currently is, because on top of having MEV centered in every single rollup, and then on Ethereum, if I assume that there's some use of Ethereum as well, there's also going to be a lot of MEV between rollups and between, let's say, a rollup and the base layer. For example, arbitrage. So let's say a Uniswap pool on one chain is drained versus the other. It incentivizes people to move their liquidity around. And that creates an interesting new class of problems, I would say, in terms of MEV and how you would solve it and optimize it, because you need to find the fastest way to bridge between different chains. And then, because right now it's, in terms of how MEV works right now, it's relatively straightforward. You see a transaction, you either sandwich it or front run it, or you see an arbitrage opportunity and you arbitrage it, and that's basically it. Whereas if you see an opportunity on one chain, but you have funds on the other chain, you basically need to find the most optimal way to move and to exploit it as fast as possible.
Yeah, I'm super curious about this as well, and ultimately kind of where it will end up. I mean, the fact I'm curious about rollup to communication and how that'll end up working. It does seem like it's going to be a bigger issue as we have different rollups and different kind of ecosystems, and then, as you said, the liquidity moving from one to another. It'll be interesting to watch.
Yeah, it's definitely an open-ended question. I think it's from technical perspective, it's not an insurmountable problem. It's just the problem of, do we actually standardize the way bridges function, or everybody has their own way of functioning, and then basically the developers figure out a way to fix the communication between the bridges. And people are attempting. I had a few conversations about like standardizing bridges or like doing an EIP on like a bridge spec, but considering the effort involved in optimizing every bridge design, I think it's unlikely that you'll get some standardized API, and therefore it'll be more responsibility of like the cross-chain bridges to optimize and basically support every single API or like the smart contract functionalities of the bridge.
Yeah, that makes sense. Interesting. Very interesting. Well, thank you again for coming on the podcast. I feel like, I mean, we've touched upon so many topics, kind of what people view as decentralization, kind of different ways to try to quantify it, what you can quantify, what you can't quantify, different discussions around full nodes, light clients, rollups, zk, optimistic, Ethereum's improvement proposals in terms of throughput with proto-dank sharding and full dank sharding, MEV. We touched upon a lot, and I think it's amazing that you have kind of the wealth of knowledge and are able to be such a strong proponent for the community. So really appreciate you coming on the podcast and sharing all these thoughts.
Thanks for having me. It was a lot of fun. I enjoy having talking about tech rather than arguing about stupid things on Twitter. It's more exciting. And I think the way Twitter works, it's more optimized for to make a short comment and then not explain your viewpoint properly, and then people just attacking it, or like you attacking somebody else, rather than like having a proper discussion. So I always like this kind of a setup where you can actually have a long form discussion and basically talk out all the nuances and the differences in terms of viewpoints.
I fully agree. And that was the goal of the podcast, be able to talk long form with smart people such as yourself. So thank you again. Appreciate your work, and look forward to continuing talking and discussing on Twitter as well. But yeah, thank you for coming on the podcast.
Thanks a lot for having me.